Hi there, Sandra here again with the Mortgage Center. I just love giving these updates. And the main reason why I do so is I want to share information with you, but I also want to help you make good real estate decisions, whether it's your mortgage or the investments that you own, real estate investments that you own. So today I'm going to talk about three important things. Um, I have the first thing is around refinance versus mortgage renewal. So we have gotten many calls over the last few weeks about renewing your mortgage early and how that looks versus refinancing your mortgage and adding to the mortgage. And many people like to refinance their mortgage if they're carrying line of credit or credit card debt. Or they may want to just refinance their mortgage to take out equity to do some renovations to their house. Um, so refinance means taking equity out of your property and taking it in cash or paying off debt. A mortgage renewal is just taking the existing mortgage you have and renewing it early. Now, there's a couple of ways that we can do that. Not to get too far into the weeds, but I want to share this with you. We always like to go to your existing mortgage lender to see if they can get us a competitive interest rate. And if it's not possible, we can switch your mortgage to another lender, but there are some associated costs with that that can be often capitalized or included in the mortgage. So there's no out-of-pocket expenses. And those are typically, if you're early renewing, depending on how early you are renewing, there may be a small penalty to pay, but also the cost to register the new loan on the title of your property. And when you should be considering an early renewal or refinance is if you are carrying debt that you're not writing off the interest on your income taxes. So credit cards, unsecured lines of credit, you'll want to think about wrapping that into your mortgage and doing an early renewal early renewal, because as rates are going up on mortgages, so are they increasing on credit cards and lines of credit. If you, just a little trick I have for you. So if you have a mortgage and a secured line of credit, and you're not writing off the interest on that secured line of credit, we can actually transfer both of those to one financial institution. And it could be considered a transfer. So the interest rate is always a little bit lower on a transfer versus a refinance. So again, if you're worried about where rates are headed, if you're carrying debt that you're not writing off the interest for income tax purposes, you'll want to look at that and contact us. Now, you're going to be renewing at a higher rate, but what we'll do is we'll look at your whole financial picture to see if it makes sense. And oftentimes it does, but sometimes it doesn't. I also am getting we have hundreds of people that we have pre-approved for mortgages hundreds of people that we pre-approved for mortgages in the last few years. And the last year, I would say. And they're asking me, is now a good time to rent or should I continue to buy? Or should I continue to move forward with a purchase? And I think that depends. And it really depends on your credit history, your down payment, your job stability. If you are interested in revisiting your mortgage pre-approval, please reach out to us. We'll relock in the interest rate. I have had lots of questions about, is the real estate market going to tank? Are home values going to tank? And, we feel that it's not. And it's not just that we feel that way, but there are some really good economic indicators that say that home values will continue to be strong and appreciate, and home will continue to appreciate in value. I've included also a link to a very interesting article by Greg Ramont. He is with Centurion REIT, Real Estate Investment Trust. And in his most recent article, he talks a little bit about what some of those influences are, and they're namely immigration. The government of Canada has a goal of adding over 430 immigrants to the population that's already 1.9 million units short of residential stock. So immigration is influencing that. So demand, again, is influencing real estate values. And that little blip that we're seeing right now in some softening in values, the main reason for that is interest rates. So we actually don't feel that there's going to be a significant decrease in values. We're still going to see good appreciation year over year. Mind you, we might not see 20 or 50% appreciation value, but in Guelph and the surrounding area, like we've seen on average in the last 40 years, I think it was something like 6.8%. So I'm here to help. My team, we do a wonderful job. You can just email me, uh, click on the link below to schedule an appointment, and love sharing this information with you. And thanks so much for contacting us to help you with any of your mortgage or real estate needs. Have a great day.